Good morning, good afternoon, or maybe even good evening, depending on where you are. My name is Karen Righthand, and I am the Vice President of Corporate Marketing at SCS Global Services, and I'll be your host today. Today's webinar, brought to you by SCS Global Services, is about greenhouse gas verification. I will be joined by our Program Manager, Penlyn Crawford, and we will get right into the content now. But before I do, I'd like to introduce you just a little bit to this platform, GoToWebinar. To avoid any unnecessary background noises during the presentation, you've all been entered into the webinar in listen-only mode, and that doesn't mean that you can't ask questions. You have in your webinar doc, you have a question portal. So please, as you think of questions when the presentation is going on, please go ahead and type your question and hit send, and your question will be there for us to see when we get to the end of the webinar. And depending on how much time we have, we're trying to keep this very short, being mindful of your time. We'll make every answer to answer all the questions submitted, but if we have some unanswered questions, we can email you privately after the presentation. I also want to let you know that our presentation is being recorded, and the recording will be sent to all that registered for the presentation at the end of the webinar. So let's go right ahead. I just want to, many of you may not know SCS Global Services, but we are celebrating our 40th year in business. We've done over 30,000 certifications in over 125 countries. We've got at least 15,000 clients, and we have auditors in every major market. And this is our institutional network. The SCS Global Services is, as I said, 40 years old, and we are the certification, verification, and auditing body. We also have a related .org, which is SCS Standards, and they do standards development. We have a separate entity for consulting services, obviously. Because we're a certification body, we can't consult. And we have just launched the Global Heat Reduction Initiative, which is about slowing global warming with full climate accounting. Our reach is really both global and it crosses virtually every sector of the economy. So this topic in particular, greenhouse gas accounting, applies to every industry, and we have lots of sector expertise in all different sectors of the economy. And as I said, we have offices and practitioners all around the world. So with that, let's dive into our topic about verification, and let's just look at a few of the drivers. This is a fairly new one. Some of you may have heard about it, but California Senate Bill 253 applies to any company with a total revenue in excess of $1 billion annually that's doing business in California. So even if you are located in Europe, you're located in South America, if you are selling products in California or providing services in California, you would fall under this requirement. It applies not just to public companies, but also private companies. And it requires you to report your Scope 1 and 2 emissions to the California Air Resources Board. The California Air Resources Board will be the governing body, and they will require you to also seek assurance for your inventory in 2026 and graduate to a reasonable level in 2030. They will also require Scope 3 emissions to be reported starting in 2027. So that would be for your 2026 inventory. So while that sounds a long way away, that means that in 2024 and 2025, you have to start compiling your inventory for your scope 3 categories so that by the time you have to report those on your 2026 inventory, you would have your inventories prepared. So that is one regulation. And then this one, the SEC, the United States Securities and Exchange Commission Climate Disclosure Rule. We have been talking about this rule for what, 2 years? And there was a very lengthy public comment period. They published the rule in early March of this year, and it immediately was challenged both by environmental groups that said it did not go far enough, and by Republican-led states and business groups for overstepping. It's important to note that the rule as published really only required reporting of scopes 1 and 2. So this is why I think the environmental groups were really disappointed that scope 3 reporting was not required, as it is in the California law that we just looked at. You know, what is happening now is that they've paused the rule, so you don't have to worry about it right now, but that doesn't mean it's going away. And so you really do need to get ready. My guess is that it's going to come back in virtually the same form. I mean, I do say my guess, but we do work in the industry and we've been following this very closely for a couple years. It doesn't mean that you shouldn't start to compile your inventory and be ready to report. So those are the two that I wanted to cover. Of course, there's a lot going on in the EU, and there are evolving regulations always coming out, but I think those are the two. It was interesting at a recent conference, right as the SEC put their rule on hold, the state of California was talking about, you know, our ruling is going to move forward. And so, yes, it's not going to cover as many companies as the SEC ruling will cover, but if you're doing business in California, which is like the 6th largest economy in the world, you're still going to have to report. So with that, I'm going to turn it over to Penland and let her take you through the actual agenda of verification that we're going to cover today. Thank you.
Perfect. Thank you, Karen. So, as mentioned earlier, my name is Penland Crawford. I'm the program manager for GHG Emissions Inventory Verification, which we often just call inventory here at SCS. And I'm going to dive a little more into the weeds of what is encompassed in our verification process, why it's important to go through verification, and then I'll go a little into the levels of assurance, and then finally discuss timing in relation to our process, as well as the various schemes that you might be reporting to. Some of those, which you'll see, are noted here on this slide, representing both the voluntary and the regulatory markets, like we were just discussing. So as you are probably aware, at this point in your journey, inventories can be very complex. There are various data management systems, as well as the human interaction aspects that make them really difficult to maintain. They also will grow and evolve over time based on changes within your company, as well as updates to methodologies and standards. As we discussed earlier, the changes in the regulatory space too. So broadly, verification really allows you to report to your stakeholders or standards with an added level of confidence. So on the next slide here, we will dive a little more into the verification process, but I want to touch briefly on the GHG inventory and the components. I'm sure you've seen this image before, or at least something similar. So as a reminder, your company's inventory is going to be defined by these scope-based emissions. The scope 1 categories, seen in yellow here on the middle of the screen, are the sources owned or controlled by the company. Scope 2 emissions are going to be any indirect emissions obtained by the company. Most commonly, these are going to be items like purchased electricity. So the emissions that are not directly occurring on the property controlled by the company, but they're being generated there. And then finally, you have what we call the scope 3 emissions, which seems to be the one that we're talking a lot about these days. These emissions are also indirect, but they occur throughout the company's value chain. You can see here there are a total of 15 scope 3 categories that are broken down into upstream and then downstream aspects of that value chain. The challenge really with scope 3 emissions is they're more complicated to collect. However, generally they do account for about 50% of most companies' total GHG inventory emissions, and that number can often be even higher for organizations that manufacture products. So it's really important when you are building out your scope 3 inventory to know which of these categories pertain to your organization, understand how to collect that necessary data, and then how the different emission factors can affect your overall output. We really recommend when working with clients that you commit to obtaining quality data so that you can create a quality inventory. This can be accomplished through a designated employee collecting data, or even reaching out to a third-party group such as SCS to help you build out your inventory. And just as a general note, we would not ever verify any inventories that had contracted with SCS for development, just because that can be a huge conflict of interest. But moving forward, we'll take a look here on the next slide at what really makes up your inventory and what are the components and what does that look like. So here you'll see a really simple representation of an inventory and the process through which data flows in this system. Now, make a note that yours will likely look much more complex than this. But starting from the bottom with primary data records, this is in line with what we were just discussing. So you've gone through the process of collecting invoices, or maybe you've had to calculate purchase goods sold. Whatever sort of protocol you've followed to collect the data is then inserted into a data tracking system, which then connects to your calculations and finally is output as the GHG assertion, which is the main inventory total that is going to be reported to your stakeholders. So for reference on the previous map, all of those sources have now rolled up into that one final number that was in the clouds, and that is what you are reporting on. So as you can see, there are many levels of this process, and like I said, yours will be much more complex. So you can see there's always a chance of error within each level, especially if you are working through multiple departments, or you're sourcing data from your value chain, or even with a third party who has developed your inventory. And on the right, you can see some of the common errors that we encounter through each stage of this inventory. So items like missing records, double counting, and even outdated emission factors. So this is really where the benefit of seeking verification begins, since we can provide that independent third-party review to determine the magnitude and the materiality of the errors uncovered that would ultimately impact that final assertion number. So that final number is really what your stakeholders are seeing. So you want to be able to report those numbers to them with the added assurance that is given to you by a verification body like SCS. So once we have your inventory, here on the next slide, we are preparing to submit to whatever standard of your choosing. This is where the verification really comes into play. We start our verification process with a pre-engagement stage. This is where we really focus on defining what the project will look like. We assess our internal capabilities, as well as confirm that there's no conflict of interest between the client and our verifying team. Once all the contracts are in place, we really start planning the verification. This entails a data request to the client and performing a high-level overview of the initial inventory to perform a risk assessment where we can identify those key areas that might have the highest potential for error. This really aids us later on in designing the verification because we can be more prepared for those high-risk areas. So once we have our design, we'll proceed with our verification activities, where we'll perform all of our evidence gathering tasks, as well as recalculating a sample of the inventory. Also within this stage, any findings in that first run through will be reported back to the client so that any errors or discrepancies have the chance to go through necessary corrective actions and be resubmitted for final approval. And once those are all closed out, all of the findings are closed, we move forward into the fourth stage where our process will be drafted into a detailed report and statement. And then we move on to our final stage of independent review, which is when we bring in another team member that is not involved at all in any of the previous stages. And they will come in to determine whether the project has been conducted according to the objectives. And then they'll also be able to determine if the results are correct. So once we go through all that, we have our verification report. And one of those main considerations when we're doing verification and planning is this level of insurance. And we kind of mentioned this earlier when talking about California, because these are going to be aspects of that ruling. But at a base, assurance really determines the level of rigor and a type of conclusion at the outcome of the verification process. It's typically broken down into two categories, as you can see, limited and reasonable. Limited is going to be less rigorous and less costly. However, it still offers a very high level of value for your company. Essentially, limited is assuming the elements of control within the system and that they are reliable, whereas reasonable is going to involve more testing of the control systems in place, and it also might involve redesigning of evidence gathering activities as new information is obtained. So typically, I would say that we find most of our clients come in at a limited level of insurance, and then as their inventories and data collection methodologies evolve over time, they may move on more into a reasonable level of assurance. So that kind of finally brings us to timing. Timing, besides data quality, is maybe the most important consideration as you are planning your inventory reporting. Typically, the verification process alone takes a minimum of 8 weeks. This would be in a perfect system where the client is prepared with their data and all other processes move according to plan. So as you can see here, there are many factors that can influence timing and the ultimate cost of the verification that may not be within our control. For example, size and complexity of the inventory. You might be an organization with just a handful of offices, or you might have thousands of reporting units across the world. So it really is dependent. As for aspects within your control that can assist us in expediting the process, having an understanding of your methodology, being transparent with your inventory data, and also providing access to any supporting evidence such as knowledgeable staff or data records. The key for the final aspect that will affect timing is the number of findings uncovered during the verification activities and how quickly the client and the team can resolve those and re-verify those results together. As a note here, some standards, typically mostly on the regulatory side, can involve other aspects such as on-site verification that can extend the verification timeline as well. So the main message here for all standards is don't wait, reserve your verification as early as you can and really be ready to go on day one with your data. So that takes us to a couple more deadlines. Understanding the timeline of our process is key because we want to make sure we are all able to meet the deadlines that you are reporting to. Here you can see various reporting deadlines for some of the standards you may report to. For those of you reporting or considering reporting to CDP, their deadline to be scored is September 18th of this year. In previous years, that's been late July. So there is additional time this year to complete verification process. However, keep in mind though that there tends to be very heavy demand in the months immediately before those deadlines. So reiterating not to wait to seek out verification. As for some of the other reporting bodies that we see, TCR, or the Climate Registry, does not have a specific deadline. CARB, MRR, like we were discussing earlier, has a deadline of April 10th and June 3rd, dependent on the entity type. CORSIA has various deadlines. One of those most common is July 31st. And then the Washington Cap and Invest program, which is in its kind of first year of iteration, is going to be November 1st of this year. And then, as we noted earlier, California and SEC regulatory deadlines would be approaching as well in the next few years. So it's something to really stay on top of and keep an eye on as you are developing your inventories. So rounding out on the next slide here, I've kind of touched on it already, and Karen has as well, but there are so many benefits that third-party verification provides, such as reporting to your internal and external stakeholders with confidence, improving ESG ratings, or even your CDP score, and then meeting a lot of those potential supply chain requirements that we're seeing pop up more often. And then, of course, being prepared for the future disclosure requirements. You can see some of the companies we work with below. There we have a variety of clients across multiple industries of varying sizes and many geographic boundaries. So that really takes us to our final key takeaways here. Like I mentioned, verification really just helps to improve your reporting, increase those CDP scores, and also prepare for upcoming regulations. So don't wait to secure your verifier, especially for the CDP folk, as the deadline is really quickly approaching. But I will throw it back over to Karen so she can cover some of our additional services and tell you about our upcoming webinars for inventory.
Thank you, Penlin. Yes, so you know, just a few additional services if you're in need of them, and then we'll get to the questions. We do inventory preparation, and if it was a situation where you wanted to verify with us, we would probably then shift that over to our consulting division so that there wouldn't be a conflict, as Penlin mentioned. Our consulting services do CDP reporting for companies. So if it's something that you know, don't want to do yourself, they provide like a turnkey service. CORSIA is a complicated, it has to do with the airlines. I don't know if we have any airline stakeholders on the line today, but CORSIA, there's also low carbon fuel standard and other things that we can provide support for CORSIA program. We do carbon footprinting, so both not just preparation for entities, but we do carbon neutral certification for products. We do product carbon footprinting, and we also do carbon offset project verification, but that's really about verifying that the credits that can be lent from a carbon offset project. So now we'll look at some questions, and I wanted to tell you that we do have another webinar coming up at the end of the month that will focus on compiling corporate GHG inventories. So if that's something that you need to know about, I'm sure you can find the information on our website and register just as you registered for this one. But that'll be on April 25th. So that will go much more into the questions around scope 3 inventories and whatnot like this. So looking at our questions, please, if you do have a question, please go ahead and type it into the question docket. Thank you to Nancy, who let us know that the Washington verification deadline is actually August 10th. We are a new verifier to that scheme, and we were looking everywhere to confirm that. So thank you so much for that, Nancy. We appreciate it. We have a question here about, Penland, I think you could take this one. How does the level of assurance impact the verification timeline? Does a limited always take less time?
Yeah, absolutely. So I would say in general, limited does take a little bit less time. The thing with the reasonable is we're going to require a little more data input so that we can confirm where sources are coming from. So for instance, you might have to supply invoices. So that's going to take more time for our team to go through to verify that all of the numbers are being transferred correctly into your data management system. So it doesn't always, depending on the size of the company, so that can play a role as well. But I would say typically limited does take a little bit less time.
Yeah, I would agree with you. And I also would say, though, if it's your first time verifying, even at limited, if there are a lot of findings and there's, back and forth, we usually, plan on a round or 2 rounds of back and forth, but that can also extend the amount of time that it takes to do a limited verification even. But, once you do your first one, then you sort of know where the pitfalls are and you can improve your process. So that can streamline it and get you ready for a reasonable level of assurance. Here's a question: does SCS support for reduction goals or help with SBTI? Yes, our consulting team has a full science-based target initiative preparation process. So I would definitely say go to SCS Consulting Services and they can help you with that. Here's another question about SB 253. If we sell only a small amount of products into California, do we still fall under this? And the answer to that is actually it has to do with the size of your company, not the dollar value of the products that you're selling into California. Yes, the answer is yes, you still would fall under that ruling. And then here's a question, Penland, you've kind of covered this, but if they don't have to verify until say 2027 for scope 3, when should they do their first verification?
I would say that it's really important to get comfortable with the verification process. Like Karen mentioned, there's a lot of findings, especially if you're new to having your inventory verified. It's really good to just go through the process because it gets so much easier as you go and as you complete this year to year. So I can't really tell you exactly when you should start, but I definitely recommend getting in with verification as early as possible just to be prepared for having those disclosures.
Right. Someone asked, have we done GHG inventory verification for a city? The answer to that is yes. We have done both cities. We've done other entities that are sort of like cities, like water districts, utilities, large university campuses. So the answer to that is yes. Most of those have been through the climate registry. So there's that. And we're coming up on time here. Let's see. So for California, is the first inventory due in 2026, or is the inventory for 2026 going to be due in 27. No, you are correct. The first inventories for scopes 1 and 2 would be your 2025 inventory reported in 2026. And so that pretty much looks at the questions that have come in. And I want to thank everyone today for attending. We are at time, and we will be sending out tomorrow the recording of this presentation. And certainly we stand ready to help you in any way we can. So here's some contact information, and we look forward to working with you in the future. Thank you so much, everyone.